Eric Mother for the weekend of August 2nd and August 3rd, 2014. Let's take a look at how the markets closed on Friday, with the Dow down about 0.42%, Nasdaq down 0.39%, S&P 500 0.29%, and also we see that the VIX was unchanged and gold was up slightly, about 1% for Friday's session. If we take a look at the weekly performance for the S&P 500, was down 2.69% for the week. Let's take a look at the Dow, and for the week the Dow was down 2.75%. Take a look at the Nasdaq, which was down 2.18%. Before we begin our analysis on the charts there, let's take a look at what we'll observe here. In the past week, we saw that when markets moved below 50 on the daily time frame, we had a big down daily session, which was on Thursday, when the S&P 500 and the Nasdaq moved below 50 on their daily RSIs. So that, and this is, of course, we are talking about the RSI here and the level of 50. We also see that this week the Dow managed to close below 50 on its weekly time frame. So you have any movement on the dailies, weeklies, or monthlies where the stock or index moves below or above 50, you expect that to be good for a big change in direction. And you can see videos on YouTube where I talk about effects of how markets change direction and the magnitude of the moves when markets are moving either below the 50 level or above the 50 level on all time frames, even hourly, 30-minute charts, and of course dailies, weeklies, and monthlies. As an example, if we take a look at the Dow, which was down 2.75%, and between the Dow, the S&P 500, and the Nasdaq, the Dow was down the most. Why? Because the Dow was the only major average among the three that moved below 50 on its weekly time frame. So closing at 49.05 on the weekly time frame. If you compare that to the S&P 500, which did not move below 50 on its weekly RSI, that's why it didn't have a very big move. And you see that the Nasdaq also did not move below 50. Did not move below 50 on the weekly RSI. That's why its move was also slightly lower to the Dow. The Dow had the biggest move because it moved its weekly RSI below 50. So question becomes, what happens next week if the Dow jumps back above 50, which would suggest a relatively strong up week? That would be the conclusion. So if we have a market recapturing that 50 level on the Dow next week, more than likely we are going to have a strong week to the upside. So let's go to the charts, and this is the Nasdaq multi-year weekly chart, and we see that we held the previous weekly closing high. So yes, we did pull back, but we are holding above the previous weekly closing high of 4336.22, and we closed just slightly above that, which is okay. The pullback in the market does make a lot of sense because we made a higher high in price while the technicals were making a lower low, and there was also a back test of this line here which failed. So there's a back test of that line there. Let me draw that again. I'm going to draw it in blue so you can see it. So this line here broke down here, so there was a break of that trend line there. Extend that line, you see that that was where resistance took place, which happens to be the high right now as far as the Nasdaq is concerned. Let's go to the daily for the Nasdaq, and you'll see this across the board. This line here, this green line, is where the market has been finding support going back to 2012 on the daily time frame. Every time we hit this level, the last couple of months, going back again 2013 also, is every time the market would hit that level and recapture those, hold with uniform activity there. That was a low, we held there, was a low there, we held here, that was a low, and on we held. That was a low, we held there, that was a low, we held here, that was a low. All to say that don't be too surprised if the market somehow engineers a reversal around here, because it's been doing that for many months. And also we see that the market is back to around the 50-day moving average. Everybody knows that on the Nasdaq. So that's, this is so far relatively shallow pullback, because if the market is just coming back to the 50, no big deal. It's only when it starts breaking the 200-day that the charts really start changing. So we could still find support here, which was a previous break point, and it's holding above or near those levels of 43.57. This is where we should watch this. This is the RSI holding that level. If it does, then expect the market to grind to the upside. Take a look at the 60-minute chart for the Nasdaq. And we can see here, we talked about this last week, this level here, declining line, while the market was making or attempting to make higher highs. That would be my reasoning why we had a pullback, because of the declining technicals here. You can draw it this way, or you can draw it that way. Lower lows on the technicals. And we see here that once the MACDs moved below zero, we've been talking about this, once the MACDs moved below zero, the market was very vulnerable, and we see that we got that pullback the last 2 days. Let's take a look here at the monthly, because the monthlies should be in play here. As long as the market is holding above 69.10 on the monthlies, the market should be safe. If the market breaks down below 69.10 on the monthly chart, that's not gonna be good. Now if we take a look at the Dow Weekly, we see that, and we talked about this for many weeks, while the market was making higher highs here week after week after week here, the technicals were making lower lows, right? We talked about that, and there was also resistance coming from that line there. So multiple resistance bands here, and once you see that, unless the market can break out, you expect a pullback to take place. Like I said, the market had the Dow had a bigger down week because it moved below 50, and now it needs to defend that level, and it's possible for it to defend that level, because if you take the lows, if you take this RSI low, that RSI low, and this RSI low somewhere here, and draw a straight line, you can see that it is very close here. If it can bounce off that line, that's going to be support, and it should do the market give the market some breathing room. Also, there's an argument that can be made. The previous high here in December of 2013 was 16,478. All we've done is come back to test that level. If we hold that level, the market should be okay. So 16,478.41 was the previous highs going back to late 2013. If they hold, then this was just a pullback to test that previous breakout. All right, let's take a look at the Dow Daily. And you see here on Thursday, we slashed below 50. That's the reason why we had this big candle here, or big down day, because the RSI moved below 50. Now, the one thing we have to watch here is the fact that we moved below 69, actually below 30.90, which is the other version of 69.10. They all add up to 100. Anyway, the market staying below that level here is not good. It needs to rebound if it's going to move high. And we can see that we are watching, everybody's watching that 200-day to see what's going to happen, if we're going to test it or not. But for now, the Dow is in a dangerous spot. And you can see that the MACDs are now both below zero here. The MACD and the main MACD is about to move below zero. That's not a good sign of where the market wants to go. Let's take a look at the hourly for the Dow, and this is a very important chart in my opinion, because you go back to February, we've been bouncing on this line here since February without fail. Once we moved above that level, that was a nice entry point there. We bounced off this line every time successfully. In fact, I've been using this chart to tell me when the market is safe to go back on the long side. It's worked very well until now. For the first time in a while, this market did not find support here. and so we are trading here, which is bearish. Let's take a look at the transports. Actually, let's go back to the Dow Monthly, because that's the Dow Monthly. And you can see the problem here with the chart here is that the Dow Monthly is now back below 69.10, and that's a red flag. Also, we are breaking below this monthly trend line that goes back to 2009. So the fact that we are breaking that trend line, we have to be very careful here. The last time we broke a trend line was here, a major multi-year trend line, and that happened to be in late 2007. So let's be careful here, because this type of situations can easily get worse. If we go back to, let's take a look at S&P 500. S&P 500, and what I see here is we talked about this channel being some type of nice constructive upward trending channel, but over the last couple of weeks, in fact over a couple of months here, we've been knocking heads with this level here. We've been saying for a while that more than likely after all this resistance we might see the pullback. Pullback has come, and we see that now the S&P 500, like the Dow, could find support on this lows line. This lows line has been established since 2011. If you take the lows there, close to those lows, touching those lows, close to those lows, touching those lows, What I'm saying here is this is where you'd expect support to come, if it's gonna come. On the other hand, if we break, watch out now, because the downside could get very ugly. On the daily, S&P 500, we see that the market has been finding support successfully here. This has been support band. As of right now, it is not looking like it wants to hold. So it does need to recapture this level here with uniform activity, something like that, or some type of uniform activity, if this is going to be a short-term pullback. Otherwise, where it's been finding support over the last couple of months, that support is not being given right now, or there's no opportunity here. If the market can't hold that level, I would expect you to continue trading in this general area, which is going to be bearish. It's been trading above that general area over the last couple of months. It's been trading in this general area, which has been bullish. So we have to watch and see where it trades in the next couple of days, next couple of weeks. S&P 500 60-minute chart, and this is the one that we looked at on late Thursday. We talked about support on this line on the hourly for the S&P 500. This is where the S&P 500 has been bouncing, and if you take a look at this chart, if you can pause the video, you'll see that the green arrows show you where it's been bouncing each time on this line. But now for the first time, we are seeing a slightly different reaction. There's no support being offered at all. In fact, it's trading in this general area, which is not what has been happening over the last couple of months. And also there's a trend of this RSI lows line here. So this RSI lows line on the hourly has failed. So we have to be open to the idea that this market is starting to give us things it hasn't done for a while. So there's some bearish indication that what was holding is not holding anymore. Now, if we take a look at the VIX daily, we see that finally we managed to break out above this previous resistance band here, which is where we've been stalling. We stalled here recently, which was the short-term high before this pullback here. We had stalled here before this pullback here. So this pullback here, so on and on. So the VIX has been stalling generally on this line here. So we see that we are above that line. The last thing you want the VIX to do if you're a bear is for the VIX to have a reversal like that. It is the same thing it did here. Sharp reversal lower, which was the high. So if the VIX is going to do well, it needs to hold and stay above this level here, this level. It needs to stay and hold this general area here. Otherwise, if it has a sharp reversal, it will look something like, let's say something like that, which is going to be bearish for the VIX, bullish for the market, or something like that, which is going to be bearish for the VIX, bullish for the market. So the VIX does need to hold its current trading if the market is going to go down. If you're a looking for the market to go down. On the hourly for the VIX, again, we see that this is where it's been finding resistance here. We said it has to be above that if the market is going to sell off. It had to be also above the declining top lines, and you can see it's doing both of that. So if the VIX is going to continue doing well, pushing the market lower, it does need to hold this general area. Otherwise, if it moves back below those two lines, it fails. One more chart here is for Apple, as we always do on the weekend video. It's holding above its monthly buy point of 91.48, so it's doing well, holding above that. It's holding above 69.10 on the monthly, but barely. So we have to watch those two levels. If the RSI can't hold 69.10, that's not good. If the price cannot hold above 91.48, that's not good. Right now it looks okay to hold because we haven't seen any sell signal.